Hey, what's up, guys? Are you concerned about home equity theft? Well, in this video, what I'm going to do is show you one strategy you can use to protect the equity in your home from someone stealing it. All right, let's get started. So the idea for this video actually came from one of the viewers of my many videos here on YouTube. And the question was, hey, Clint, can I use a different strategy, or what strategy can I use to protect the equity in my house, my personal residence, or even your investment properties? Because I'm concerned that with all the theft that's going on out there, with respect to equity, I don't want to be left in that situation. So I started thinking about it and I realized, hey, there is one strategy, I've talked about this before, that can protect the equity in your property, and it's so simple, we all can do it. What is that strategy? Well, what it entails is, first off, starting with that Wyoming Holding Company that I talk about all the time in my videos. You see, many times when we create a Wyoming Holding LLC, and I tell you to put your safe assets into this LLC, you may be thinking that the only purpose for this Wyoming limited liability company in this context is protecting your brokerage account, your savings account, your crypto, your private notes, things of that nature. But you see, this one limited liability company has multiple uses. And here's what we can do to protect the equity in your house. Because when you look at it, here's my personal residence. Let's assume that with this personal residence, I have $300,000 in equity. And the last thing I would want is somebody to come forward and try to take that equity from me, or try to encumber that equity and get in front of that so then I don't have access to it. Well, the way you can protect your equity, and it doesn't require setting up a new entity, all it requires is that you use your existing structures. So in this case, what I would do with my Wyoming limited liability company is I would file a friendly lien against that property. So by filing a friendly lien against the property, you're encumbering the equity. So that means you're going to record a deed of trust against this house. So if I put a deed of trust on this house for, say, $300,000, in fact, you could go higher. There's no limit to how much you put on there. I would recommend that you look at the equity and go 1.5 times the current equity to cover future appreciation on this property. But my point is this, is that once your Wyoming LLC has recorded an interest against your house, what you're essentially doing is ensuring that if some criminal over here tried to come over and steal the equity in your property or do something with your title, you're going to get notified. Because any title company that looks are going to see that, hey, this Wyoming LLC here holds an interest in this property against the equity that has been recorded. Therefore, you're going to receive notice of that. So it's one of those strategies where, hey, I just want to make sure that if anything's funny business is taking place behind the scenes that I'm not aware of, as soon as that person that's trying to engage in this transaction goes somewhere to a title company, then they're going to reach out to me. Now, here's the thing. If you go forward and you want to put this strategy into place, here's what you're going to need. Number one, you're going to need a deed of trust to record against it. So if you already have an existing mortgage on your property, this is what we refer to as a second deed of trust. Now, some people have asked me, do you need to record a promissory note? Not really in this instance, because we're not using it other than just to ensure that we get notified in case something were to go on with the equity in the property. But if you want to, you can always put together a promissory note whereby you agree to borrow money from your LLC, and that's why your LLC is filing this lien or recording the deed of trust against your property. So this is definitely required here. And how do you prepare that? Well, you can go to your title company and ask them to prepare you a deed of trust, a second deed of trust, to be recorded against your personal residence or your investment property. They're going to ask you for how much and who are the parties. And you would explain, you give them the Wyoming LLC as the party that holds the secured interest on your house. Now, it's very simple to do this. However, you need to be aware of some things. If you want to use this strategy, you first have to make sure that your state will not tax you on recording this type of encumbrance on the equity in your property. For example, Florida, for instance. Although we have a lot of strategies for Florida, this is not one of those. So if you have a piece of property in Florida and you want to use this strategy, understand doc stamps will apply to it. And so it's probably not going to be in your best interest to use this in Florida. You want to make sure you check with the county or the state, wherever your property is located. Your title company should be able to inform you whether or not this strategy can be employed without any type of tax being assessed on the recording. But if you can, hey, it's just one of those things that's easy to put on and it's also easy to remove. So people often ask me, well, what if I want to go and refi my property in the future? Maybe do a cash out refi. I'm going to sell. Hey, you can release it. So when you prepare your deed of trust, also ask the title company to prepare you a release. Okay, that's another document you want. Once you have that release, all you'll need to do is record it and it'll drop off your property. Hey guys, if you liked the video, make sure you hit the like button. And if you're not yet a subscriber to this channel, what the heck is taking you so long? Now's your opportunity. Take care.